China's economic data for April largely fell short of expectations, indicating that the Chinese economy is still grappling with the impact of the zero-COVID policy and losing momentum in its recovery. According to data released by the National Bureau of Statistics of China on Tuesday, May 16, China's industrial production in April grew by 5.6% year-on-year, significantly lower than the Bloomberg Economist median forecast of 10.9%. Compared to the beginning of this year, the figure increased by 3.9% in March. Retail sales grew by 18.4%, which was lower than the economist's forecast of 21.9% growth. In April 2022, Shanghai, which serves as China's economic, financial, trade, and shipping center, was under strict lockdown measures, leading to a significant decline in commercial and consumer activities. Therefore, it was expected that China's economic data for April this year would show significant growth. However, the latest released data is clearly disappointing. Bloomberg points out that other indicators in recent weeks also indicate a disappointing start to the year and that the economic recovery may be slowing down. During the May Day holiday, real estate sales remained below pre-pandemic levels, and consumers reduced their mortgage loans. Consumer prices in April showed minimal growth, while imports sharply declined, indicating domestic spending constraints. Both household and corporate borrowing decreased significantly last month. Wu Xuan, chief strategist at DeBank Fund, told Bloomberg, China's recovery momentum this year may be weaker than previously expected. He added that the People's Bank of China may cut interest rates in the second half of this year to support economic growth. According to CNBC, the Chinese stock market has given up its gains since the beginning of the year. The Shenzhen Component Index, which is the main stock index of the Shenzhen Stock Exchange, has only risen 1.48% year-to-date and has experienced a 9.5% decline from its peak in early February. Winnie Wu, a China equity strategist at Bank of America Securities, commented to CNBC, China is in a recovery phase, and compared to last year, as we just saw, the numbers are positive, but whether the recovery is good enough for the market, whether it meets investors' expectations, that's a big question. It's not enough to meet investors' expectations, and that's a problem, added Wu. She further noted that domestic demand in China appears to be fading. She said, the recovery of income, job security, and confidence will take time. In addition, both the Private and Official Purchasing Managers Index, PMI, for the manufacturing sector in China dropped below 50, indicating contraction in April. The Caixin China Manufacturing PMI, published by Caixin Media, fell to 49.5 in April, marking the first time in 3 months that it dropped below 50. Meanwhile, the official manufacturing PMI released by the National Bureau of Statistics of China also declined from 51.9 in March to 49.2 in April. Last week, the General Administration of Customs of the People's Republic of China released data showing that in April this year, the total import and export volume amounted to $500.63 billion, representing a growth of 1.1% in USD terms. While exports increased by 8.5%, imports declined by 7.9%, which was higher than the market's expected decline of 0.2%. On Sunday, Goldman Sachs economist Hui Shan wrote in a report, market sentiment remains very weak, based on our client conversations. She expects the government to take more measures, rather than changing interest rates, to improve market confidence. She wrote, symbolic measures aimed at boosting confidence, such as lowering the reserve requirement ratio, seem more likely to be implemented, particularly when there is high liquidity demand around quarter end. In the latest economic data, the youth unemployment rate for the age group of 16 to 24 has reached a record high of 20.4%. Winnie Wu stated, many investors see this as a leading indicator. If young people cannot find jobs and have no income security, where will confidence come from? How can there be a consumption recovery? She mentioned that poor market confidence can also be observed in data related to new home sales and other indicators. The latest youth unemployment data is a worrisome sign because there are an estimated 11.58 million students expected to graduate from universities and colleges this year. Bloomberg points out that despite a decrease of over 41 million in China's working-age population over the past 3 years, youth unemployment rates are still rising. This is a result of the economic losses caused by COVID-19 and China's aging population. According to World Bank data, the decline in China's labor force during this period is nearly equivalent to the entire labor force of Germany. In 2021, Germany had approximately 44 million labor force population.